Director and Chief Executive Officer at Syngene, joins us now. Morning, Peter. Thank you very much for joining us. Well, it's a very good performance both at the top line and at the bottom line. Can you tell us how the quarter panned out?
Sure. Well, I think the quarter's been very strong. We've seen revenues grow at 28%. We've seen EBITDA grow at 30%, and we've seen PAT grow at 31%. So this is a comprehensively strong set of financial numbers. Our margins at EBITDA have been sustained at the 33% level, and the PAT margin has risen slightly to 20%. So we're very satisfied with this robust set of financials. And perhaps even more pleasingly to us is that we've seen the growth come from across all our verticals. We've seen growth in our dedicated centers business, our discovery services, and our development and manufacturing services. So growth has been multifactorial, and I think that's perhaps most pleasing to us.
Do you think you can replicate this growth of 30% that you've seen in your revenues in the first half of the year in the second half as well?
So we don't give quantitative guidance as such. We are committed to a target of $250 million of sales in fiscal 18, and we remain committed and very confident of that. Having said that, I think we're halfway through the year. We have good visibility for the rest of the year. We have a strong order book again across all our key verticals, and I think we look to the second half of the year with high confidence that we can deliver good growth again, strong growth against the comparable period last year.
Okay. Can you tell us whether you have had more client engagements, any numbers on that front in terms of the number of clients you're servicing now?
Sure. I think the big picture there is that we've grown our client base over the last 5 years from just over 100 now to just over 200. And again, in terms of client numbers, the best way to look at it is on an annual basis, and we'll be updating the client engagement numbers at the end of the year. But we're continuing to engage new clients as well as grow existing clients all the time.
Would that require capacity expansion? Have you some capacity expansion plans on the anvil?
Yes, we have quite a comprehensive growth CapEx investment program coming forward over the next 3 to 4 years, where we will see substantial capacity enhancement. It's ongoing right now, and we'll see that across, again, many of the verticals of our business, expanding capacity in chemistry, biology, in biologics manufacturing, in formulation and formulation development, as well as introducing new capabilities, exciting areas like oligonucleotides, antibody-drug conjugates. So we have an ongoing program of capacity expansion to meet the growing demands of our customers, and also capability extension in order to build in new capabilities that are required in the sort of dynamic changes going on in the discovery, development, and manufacturing arenas that we serve.
So over the next couple of years, Peter, how much do you think your operational profile could improve? Currently, your margins are somewhere around 30 to 32%, but given that you are entering into new areas and new capabilities, do you think you could see a significant up move in your operational performance in the years to come?
So I think what we've seen in the last 5 years is that while we have been quite dynamic in changing operational capabilities and capacities, we've seen that we've been able to maintain margins within a fairly narrow range. So over the last 5 years, we've maintained our EBITDA margin in the low 30s to the mid 30s, and in terms of PAT margin, we've maintained that in the high teens. And we're very confident that as we grow our business, as we extend capacities and extend capabilities, that we'll be able to sustain this level of margins within those ranges.
We understand a couple of US FDA audits were done recently. Are any more on the anvil? How many?
Yes, I think that there will be more FDA audits that will come our way in the coming months and years ahead. We can't predict that. The FDA audits can be triggered by client progress with their molecules within the development programs that we're supporting them with, and the FDA can also choose to audit us on other capabilities on an irregular basis, so to speak. But we've had 2 FDA audits in the last 6 months, and we've cleared those 2 successfully with no 483s or major observations, and that takes Syngene's total of FDA inspections in the last 2.5 years to 4. And in all 4, we've cleared them successfully, no 483s or no major observations. And of course, we have multiple audits by other international agencies as well as our clients all the time. And I think this underpins our commitment and the level of achievement that we have in quality and compliance.
One final question, Peter. You did mention that you're planning to go ahead with, capacity expansion, and you have been doing that. What is the exact quantum that the company has outlined for capex both this year and next year?
So the broad picture is that we've earmarked roughly $200 million of growth capex investment over the next 3.5 to 4 years, and that will be allocated to both our significant strategic extension into commercial manufacturing, building on our existing base of pre-commercial manufacturing, and roughly half of that quantum would go towards this facility that we'll establish in Mangalore over the next 3 to 4 years. So $100 million will go to that. The remaining $100 million will be spread across multiple verticals in our business, building capacities, as I've described, in many arenas and extending capabilities in many arenas. This year, I think the growth capex plan would be around $70 million. And that will continue to roll forward into next year, as I say, as we continue both to extend capacities to meet growing demand and build in new capabilities, both to meet current demand and indeed to anticipate the future demand of new technologies that our clients and our partners wish to employ in their discovery and development activities.
All right, we leave it at that. Peter.